And we are live, hopefully for real this time, with the video working. Let me know if you guys can see and hear me. We're going to kick things off by talking about uranium. Well, it's going to be the primary subject of the video nonetheless. Before we get started though, nothing in this video is financial advice. I'm not a financial advisor, so please do your own due diligence. Your money, your responsibility, all that jazz. All right, so now with that said, let's go ahead and dive in. We've got URNM on the screen here, and these are the daily candlesticks. But before we zoom in, I just want to take some time to really appreciate this move up. It's been since, let's see, June of this year, up until today. As we go live, we're up a whopping 37% just about in URNM. So, we haven't had a consistent move up in this fashion in quite a while. We've had violent moves up, right, with these various humps here, but it wasn't, got one here, we had one here, we had one here. But the difference between these three big moves and this big move is that look at how smooth and consistent this is. Whereas these are just rockets to the upside and then it comes crashing down. So what we're seeing today with the URNM price is a lot healthier than we saw during any of these humps here. So this is really good news for URNM, the miners in particular. Let's go ahead and zoom into the dailies. Oops. Unselect the little pencil icon. And what do we got? So we finished the week strong with a green candlestick. We've got this support line that's been formed since June. What is it? June 2nd, I want to say. June 1st. Up until today, September 9th. So it's been about 3 straight months to the upside. And look here, guys. Anytime we have these humps like we had here and here and here, what's the same story? It's always a level below the previous hump. This hump was lower than this hump, which was lower than this hump. But what we have today has exceeded the February highs. Now, we did try to break through the September 2022 highs, but as you can see here, we tested the resistance line, didn't quite succeed, but it's okay, it's okay, it's okay. We'll get there. We'll break through. We'll break through. I believe at least. But I don't know. Let me know, guys. What do you think? Do you think that we'll break this old resistance from September of last year? So yeah. So we are teetering on a 1-year high at the moment. So at that level, we would have to break $41 in the URNM price. Now let's head on over to the weekly candlesticks. Now remember, why do we look at all of these different time intervals? Well, number one, the dailies can kind of reveal to us short-term trends, but when we shift over to the weeklies, we can get confirmatory analysis. So we see an uptrend. Let's shift over to the weeklies, and the weekly candlesticks are telling us the exact same thing. We finished another week in the green. Now, we do have this large wick at the top where it shows the sellers overwhelming the buyers. But I wouldn't quite call it a reverse hammer candlestick, just because as to where the candle is in this case. It'd have to be a little bit lower down, but it is something to look at. Regardless, we have moved up quite significantly over the last 3 months. So to take a little profit near these levels isn't really that inconceivable. What do you think? Do you think this is a, are we going to get the rug pulled from under us again? Like so many times before, like here, here, and here? Or not? Are we just going to smash through this resistance line, smash through this wall, like the Kool-Aid Man? If the Kool-Aid Man was in bull form, because he would be in a bull market, just smash through this wall here. But I digress. So URNM, guys, is looking really good. Let's look at this thing on the monthly candlesticks. And we see the same story. 3 prior big green months. Now, the fact that we're seeing big green candlesticks on the monthlies, that tells us where there's smoke, there might be fire. So we've got something going on here. You look at the rest of these wicks here. Prior humps have only had two green candlesticks, right? This hump here only had 2. This hump here only had 2. This one only had 1. So the fact that we had 3 and have already started the month up in the green looks pretty damn good. What do you think? Am I getting a little too arrogant in my optimism here, or not? Let's take a look at URNJ. So the difference between URNM and URNJ, and let's shift back over to the dailies. We don't have that much data in regards to URNJ. So URNJ is it's an ETF of some of your smaller uranium mining stocks. So no Cameco, no Kazatomprom, no Sprott Physical Uranium. It's mainly the stocks that you guys probably own, really, unless you own Cameco and Kazatomprom. But that's kind of where I dabble too. I don't really mess around with some of the large caps, especially at this moment. They've already moved quite a bit. Typically, what happens, guys, is your large caps move first, followed by your mid caps, and then your small caps towards the end. So we kind of move down or move up the escalatory ladder with greater and greater risk. So Cameco's already moved up quite a bit. And this is URNJ. Clearly see, let's compare URNJ's rise to the top versus what we saw with URNM. So URNJ up 46% since June 1st, the bottom. The bottom of June 1st compared to, I think it was 37% with URNM. This is the kind of stuff that you'd expect to see in a uranium bull market, i.e. risk coming back on in regards to this particular sector. So this is good news. We do want URNJ to outperform URNM. That means that money is confident in the trade such that they're willing to go further off the risk curve into URNJ as opposed to URNM or the more liquid URA. The reason why, we could pull up URA in a bit, but it primarily tracks URNM with a little less torque because it's not 100% uranium play. So this is what we got here for URNJ on the daily. You can draw a support line here. We're teetering on an all-time high here with URNJ, actually. So it's looking quite good. We could also draw, actually we did draw, we could extend this line out. And boom. It actually looks pretty clean. Looks like we broke through it. And looks like we are retesting this resistance line from March 29th, it seems. So looks like we're about to break through. Are we about to see this thing break through this little pinched wedge, so to speak? What do you think? On a silver platter says favorite ETF, URNJ. Exactly. If you if you're highly leveraged further down the risk curve when it comes to some of these riskier, smaller cap uranium stocks, then you might want to use URNJ as your metric to compare your portfolio performance. Might be URA might be a little easy to outperform, especially towards the later stages of a uranium run. So let's go through the various time intervals here. So we've got the weekly candlesticks. The weeklies are showing a breakout. So the weeklies are confirming this steady move up. This what seems to be the early stages of wave 3 in the uranium bull market. I mean, you can clearly see it here. And, this line hasn't been around for a long time. It's only been here for about 6 months. But, a breakout is a breakout sometimes. You just got to take it. And this is the 1 month. Again, we don't have that much data, so we've only got like a handful of candlesticks when it comes to URNJ. But nonetheless, see a breakout here as well. So the weeklies and the dailies are confirming, the weeklies and the monthlies are confirming the this little bull market that's kind of formed here. Now, will it be something that lasts? We'll see. We'll see. But I feel very cautiously optimistic. I feel very optimistic about this. I think we've had a super long consolidation period, which went from November of 2021 up until the summer this year. So it's been about a year and a half. So I feel very good about this. Let me know what you guys think. On a Silver Platter says, did you watch Dustin Garrow's interview on Crux Investor? I know I did not, but I did see it on Twitter. I see a lot of people posting it on Twitter, so I will get to watching it. I've been hearing quite a few good things from that interview. So, On a Silver Platter says, he hinted about 2 more physical players, one based in Singapore with $500 million. I have heard about that. I have actually, some of the people that I've had on have kind of hinted towards more spot-like vehicles waiting in the wings. So, very cool stuff. Thanks, B.Woo. Appreciate that. Appreciate that comment there. I'll try to give you guys some good stuff to really sink your teeth into. Let's look at URA just for shits and giggles. Although you're not going to see anything too different from what we've already seen with URNM. Shift over to the dailies. And this is what we got. Clear breakout. And another clear breakout here. Boom. Pretty much the same pattern that we've seen with the other ETFs, URNM. Now, one thing I want to point your attention to, guys. Notice how URA only stretches back to 2011. So it misses out on a fairly violent run in uranium. So this is the actual uranium price, UX1. This is the spot price, the futures price. So it misses out on this peak here when uranium was at, reached as high as 148. And this was in 07. So URA only captures this small peak here in comparison. So we're missing out on a large part of the uranium miners story. So where am I getting with this? So TradingView allows you to kind of make your own ETF. So what I did, and for those who have seen my episode with Uselink, this is something that I kind of showcased on there. What I did is I made my own index. I picked a handful of companies, that have trading history that stretches all the way back to 2007 or '08. And I created my own index. TradingView actually has a pretty cool mechanism, script, if you will, that allows you to do so. And not this. This is my Nat Gas ETF, but this. So these are the companies that I chose to put in: UUU, CCJ, Paladin, Mega Uranium, Deep Yellow, Bannerman, Boss Energy, LEU, Uranium Energy Core, and DNNN. Now, this doesn't mean I hold all these companies. It just means that these are the companies that actually have history that traces back prior to '08. So this allows us to capture some of that, let's say, volatility, some of those prices towards the end of '07, '08. So let's see what it gives us, and let's compare it. Actually, hold on. Is this it? Nope, it's not it. Let's make that smaller. Sorry, I've got so many things open here. All right, so this is my little makeshift ETF here at the bottom, okay? And then this is your UX1 here at the top. So when uranium was at $73, the ETF that I created was at was indexed at 176. Today it's at $13.99. Now, when uranium was at 140 some odd dollars, my ETF was indexed at 259. So if we kind of see percentage-wise how much it would take to reach back up to those old levels, you're looking at a 16 or 17x in this case. 17x. Now, this is something you're not going to get from URA. Again, URA is highly skewed or weighted towards Kazatomprom and CCJ Cameco, as well as 30% of it is just non-uranium related. So I kind of see it as an underestimation of the uranium price. So, you guys can go ahead and do this too. You basically go into indicators in TradingView and just type in make your own index. You click here, and then you can just input the companies that you want to input. I did it with Nat Gas because Nat Gas doesn't have an ETF. I did it with coal because coal doesn't have an ETF. So it's really nice to have ETFs in places like uranium, like you do with URNM and URA. But there's some places where you either don't have an ETF for a commodity or a sector, or the ETF just doesn't go far enough for you to really sink your teeth into. So, based off this ETF, this is telling us if uranium gets back to these old levels, 148, you're looking at a 16x. Granted, we're already halfway there pretty much, sitting at $60. So pretty much telling us that the uranium price is fairly cheap. The uranium miners are fairly cheap compared to the uranium price. So let's look at the miners. Let's look at, let's do URNM divided by UX1. So the miners versus the metal. And let's shift over to the dailies first. I always like to go dailies, weeklies, and then monthlies. Just escalate up. Confirm your analysis every increased time interval on the way up. So this is what we got. This is the URNM miners compared to the uranium price. And look at here. Breakout. You could also draw it this way, which would indicate that we broke out all the way sometime in July, actually. So it's really good when we start seeing the miners start to outperform the metal. For the very same reason, it's really good when we start to see the juniors start to outperform the majors, because it signals confidence in the market. Buyers are willing to go further out the risk curve because they see more good things about the sector versus bad things. And yeah, this is what we've got. So let's draw a little support line here, draw a little resistance line here, or that looks a little better. Boom, breakout. Let's also draw this on a this bull market is well underway. Rick Rule likes to say we are in a stealth bull market. I think he's kind of backed off from that. He's just straight up calling it a bull market. So uranium is looking really good. Let's look at uranium priced in gold. And uranium has been outperforming gold since April. Look at this. Look at this. And it's probably something like that. Anywho, I mean, we had a clear breakout here. Uranium price in gold was signaling all the way back in April to us that the uranium price was on the move. Let's look at uranium priced in oil. Well, let's take out the little auto adjust here. Let's put it back in, and I'll take it out. But yeah, we're seeing the same thing here with oil, uranium price in oil. So, I mean, we're going through all these different ratios, guys, and we're just seeing confirmation after confirmation after confirmation. Whether it be in the gold, whether it be priced in gold, whether it be priced in oil, whether the miner is priced in the spot price, the juniors outperforming the majors. It looks really good. It looks very good. On a silver platter says, Orano halting its uranium processing in Niger. That is true. Which, perfect segue on a silver platter. Let's dive into some news, actually. So, this is an article from mining.com. Orano halts uranium treatment in Niger because of sanctions on junta. Let's go through this little article here. Orano is a fairly big supplier of uranium in the world market. So if they're out of the mix, that's going to have a certain effect on the price. It's not mince words here, but let's go through this little article. It's not really that long, so we can just kind of read through it all. French nuclear group Orano SA is halting the processing of uranium ore at one of its facilities in Niger because international sanctions against the military junta are hampering logistics. All right. So a lot of unpredictability. The conflict that we have here in Niger is, it's something you'd call a black swan. Nothing you can really anticipate. You can't really chart it out on a graph, and have like some sort of model AI predict it. It's just something that happens right out of left field. It's an exogenous event. The crisis that's affecting the African nation, which has about 5% of the world's uranium, may potentially tighten supplies of the material added to fuel nuclear reactors in the U.S., China, and Europe. Now, that may force utilities to become more dependent. There you go. The markets in, or the uranium producers in Kazakhstan, Canada, and Australia, the heavy hitters there are going to start feeling the pinch. Maintenance of Orano's treatment plan in Niger initially planned to start early next year has been moved forward amid dwindling stockpiles of chemicals needed for processing, the company said in a statement on Friday. All right. Operations continue at the group's Somer mine, which is 37% owned by the Niger government. Orano usually exports uranium concentrate to Benin, whether it's either shipped back to France or to Canada. There's typically about 4 to 6 shipments a year. To ensure a supply for its customers, Orano is also sourcing material from mines in Canada and Kazakhstan, where it takes stakes. The company said there's no emergency in the short term, it said. All right, so I did read this elsewhere as well. If they don't kind of figure out what to do here in the medium to long term, though, that's when you're going to start seeing problems. But in the near term, this shouldn't really impact prices all too much unless it kind of stretches out for a few months. So ties between Niger and France, its former colonial ruler, have frayed since soldiers seized control of the country in July and ousted the president. French President Macron has strongly condemned. Okay, well, that's it. So, yeah, a big hit to the uranium supply. Not too big, but I wouldn't call it insignificant, but it's definitely something worth reporting on. Now, so we've covered the supply side in the news. Let's look at the demand side in the news. So demand for uranium for reactors seen jumping 28% by 2030, report says, from Reuters. Let's go through this article here. Demand for uranium in nuclear reactors is expected to climb by 28% by 2030 and nearly double by 2040 as governments ramp up nuclear power capacity to meet zero carbon targets, the WNA said in a report on Thursday. Yep. All these estimates about future nuclear power demand, uranium demand, that were charted out over the course of the last few years, in hindsight, they're going to be looked at as severely underreporting what the world needed in terms of uranium. Interest in nuclear power has also risen since Russia invaded Ukraine, and many nations want alternatives to Moscow's energy supplies. WNA by Benigno? Anywho, not important. The WNA said so. From the beginning of the next decade, planned mines and prospective mines, in addition to increasing quantities of unspecified supply, will need to be brought into production. And I hate to tell you, there aren't many mines that are above their cost curve. The spot price of uranium is well below the cost curves of a lot of these mining companies that exist, aside from Cameco that have existing mines and Kazatomprom. But these developers and other producers outside of that, they're not going to sell their uranium at $61. You kidding me? Global uranium production dropped by a quarter to 47,000 and some odd tons from 2016 to 2020 and recovered slightly to 49,355 tons last year. So production dropped 47,000 tons within 4 years' time. But then they made it all back up within a year's time. Interesting. After an earthquake and tsunami in 2011 destroyed Japan's Fukushima Daiichi nuclear power plant in the world's worst nuclear disaster since Chernobyl. Countries closed dozens of reactors. Well, guess what? Japan's reopened. Our friend Rick Rule couldn't be happier. So if Japan's reopened, obviously there's a narrative shift. There's a sentiment shift. Global nuclear capacity at the end of June 2023 was 391 gigawatts of electricity from 437 units, with another 64 gigawatts of electricity under construction. Nuclear capacity is expected to rise by 14% by 2030 and surge by 76% to 686 gigawatts of energy by 2040. All gas, no brakes, guys. All gas, no brakes. Let's go. Capacity will grow through not only new reactors, the bulk of which are planned in China and India, but by extending the operating lifetime of existing plants. So we are living in a time, and I hate to say it, I really do, but it is different this time. It is different this time because the entire world is hell-bent on adopting nuclear. After 10 to 12 year vilification period of nuclear post Fukushima. So, I mean, you're seeing the numbers here. We're talking about demand surging all the way out into 2040, 20 years from now. I really don't know how long we're going to have to wait to see a peak here in our uranium stocks. You know, I mean, we might just go through like a speculative boom. These things might get a little ahead of themselves. Sometime in the mid 2020s, pull back, and then we might have another run in the 2030s. Just because, you know, the metal has to come from somewhere. Several countries with large reactor fleets, such as Canada, France, Japan, Russia, and Ukraine, are allowing existing plants to operate for up to 60 years. In the USA, to 80 years. So yeah, a lot of our stuff is really old here in the United States, in the West in general. Now, small modular reactors, which are easier to and cheaper to build, are also gaining traction. Yep. Demand for uranium for nuclear plants is expected to rise to 83,000 tons by 2030 and 130,000 tons by 2040, compared to 65,650 this year. Now, what are the odds that these projections here are also an underreporting of future demand? I mean, just think about it. They keep having to rewrite these projections year in and year out because they keep underestimating the uranium market, the tightness of the supply market, and the how fast demand is just building up. I mean, what do you think? You know, do you believe these projections? Do you think they're kind of over-reporting maybe? Or under-reporting? Or do they seem fairly accurate? Let me know. The spot price of uranium has more than doubled over the last 3 years, but it is well down from the peak of $140 a pound touched in 2007. Okay, so this week's uranium was quoted at $60.75. All right. So, yeah, that's about it. Essentially, there's going to be a lot more players in the market that want uranium, and we're going to need more of it. So we're going to need more players on the supply side, which we don't have to meet the demands of these people on the demand side. So And, you know, the supply demand deficit can get really out of hand really fast. We'll see, guys. We'll see. All right, we've got some chats here. Let's go through these. All right, Honest Silver Platter says, thanks for doing those live shows. Thanks, man. I appreciate it. It's my pleasure. Thanks for watching. If uranium gets to $100, where would that put UEC stock, or how many X from here? You know what? Let's go ahead and look at it. Feel free to drop a super chat, guys. If you're enjoying this it'll be on the fly analysis. Can you guys hear me? I think I may have lost chat. Drop me testing 1 2 3. Testing 1 2 3. All right. Drop me a 1 in the chat if you can hear me. It says I disconnected. Cool. Thanks, Silver Platter. All right. So this is UEC divided by UX1. And it seems like it's fairly priced at the moment compared to the uranium price. Let's take a look at this. See what we got. You know what? Let's just draw a regression line. Yeah, no. And let's stretch it all the way out to 500 weeks. Actually, let's go a little further. 900 weeks. Maybe a little too far. 800 weeks. All right, perfect. So yeah, this is a best fit line charting the relationship between UEC and the uranium price. Anything on the line indicates fair value. If it's above this line, it means it's overpriced. If it's below this line, it means it's underpriced. So the UEC price seems to be fine where it is. So, you know, if we were to double the uranium price from here, it's really hard to say. Go back up to $100. Let's take a look. So this was a peak here. So if we retrace back up to, we would need about a 67% retracement in UEC. Now, $60 to get to $100 from $60, that's an increase of 2/3, right? So let's pull up a calculator. This is really crude back of the napkin math. So let's do 100, divided by 60. And then to get back up to this level, it'd be another 67% rise. So probably a triple. I mean, that's my best guess. Probably like a 2.78x, 2.8x, something like that. All right. All right, on a silver platter, thank you for the super chat. Put that in URNJ for me, please. Yes, sir. So what can you specify? Do you just want to look at URNJ, or do you want to look at UEC compared to URNJ? How do you want to look at it? I'll open up URNJ. So this is what we got for URNJ. All right, so I meant buy $5 of URNJ with that money, LOL. All right, cool. I will, dude. Thank you so much for the super chat. Really appreciate it, bro. All right, let's go through these chats here. In your opinion, how many X could the global uranium miners market cap go from here? That is a good question. So, I think that's UEC. Here it is. Current market cap is sitting at $48 billion. All right. Let's do a little ratio analysis. Peak uranium market, 0708, market cap was sitting at about $150 billion. All right, so keep that in mind, $150 billion. Now, this was all the way back. Let's open up another chart. Let's call it UX1. And let's make this a separate pane. Or yeah, this should be okay. Oops. Why is it not? They're not a way to visual order. Only above and below. Okay, yeah. New pane below. Let's do that. So let's crush this. All right, so we've got UX1, the uranium price. And let's remove. Okay, so we've got the uranium price spike all the way out here. So if we retrace this M2 money supply line at the top, right? Because we want to capture, we want to control for how much money is actually moving around in the system. How much money is how many dollars are chasing goods? So back in, what is it, May of 07 to today, the money supply, according to this chart, has gone up 193%. So it's a 3x, okay? So we've got 3 times more money today than we did in the last peak. And, 150 billion divided by 48 billion, that's about a triple too. So it's multiplicative. So we can do the math this way. If we triple the market cap to 150, to get to 150, we'd have to triple the market cap. And then to control for the money supply, that's another triple. So it's, it's 3 squared. So, you're looking at somewhere around the 9x. Okay? In terms of market cap. So you could put, the math tells us, this back of the napkin math tells us that the miners would have to rise 9x from where they are today to exceed the overall market cap that we saw in 07 when controlling for the money supply, right? Because it's not enough to just say, oh, well, we can just triple today's number and that'll take us all the way back to 07 numbers. No, there's way more money today than there was back then. So you've got to take that into account. You've got to control for that. Right? Make sense? So that's my answer there. I think it's kind of a conservative answer, actually. It's my lower bound case for the uranium miners. I think at least we could expect a 9x from here. So basically, if you own a basket of uranium stocks, on average, you're going to see, I'm expecting a minimum of a 9x of that portfolio. So that's just my opinion. All right, let's go ahead and power through these articles here. So we've got a Wall Street Journal article. So they're reporting on the uranium market heading for a potential shortage, says Nuclear Association, right? So this is a chart of the nuclear uranium price. And you can see that $140 mark up here in '07. And then it looked like it was bouncing back up, but we had a black swan event in the form of the Fukushima nuclear disaster. So how far this price, I mean, were we on track to taking out this previous high back in 2011? Were we on track of taking out this 2007 high? But then Fukushima just swept the rug under us. We'll never know, okay? We'll just never know. But, I mean, look at this thing from 16 onwards. Clear move up. And the rate of increase is only increasing, right? Yet small rate of increase here. And then from 2021 to today, it's increasing at an increasing rate. So the acceleration is a lot greater today than it was in these early years in the late 2010s and early 2020s. So it says here, the world's nuclear power industry is on track to expand capacity by 3/4 in the coming decades, according to an industry report, setting up a potential shortage of uranium unless new mines are quickly developed. The World Nuclear Association, in its first market report since 2021, said Thursday there were 391 gigawatts of nuclear power capacity, globally meeting a tenth of the world's power demand. Yeah, so nuclear power is 10% of energy generation globally, and yet combined market cap, all these mines, it forecasts that capacity will rise to 686 gigawatts and perhaps as high as 931 gigawatts. Okay, so it's pretty much saying the same thing that we just talked about in the other article. So yeah, demand is going to go a lot higher. What do we got here? Thought I had something up here from... Yeah, so I actually had a comment here that I wanted to highlight just from Praise Capital, pretty much saying what we kind of alluded to before when it comes to Orano. Orano reschedules maintenance at Somer uranium plant in Niger. So what Praise Capital is saying, they simply brought forward their planned Q1 2024 maintenance plan due to current logistic problems. If borders reopen in coming months, it won't have any real supply impact. So if it becomes a long-term issue, that's when you're going to see sparks fly. Let's take a look at our favorite trust, SPUT. Sprott Physical Uranium Trust still at a discount to NAV. My God. 3.2% below NAV. Come on. Like, what is going on here? Come on, SPUT. Let's look at this price action here. There it is. So you've got the actual share price of SPUT here in green, and then you've got the net asset value price here in yellow. So you can actually buy SPUT at $14.82 at the moment. But if you were to actually take its net asset value into consideration, it's worth about $15.31 a share. So you're getting a 3% discount when you buy SPUT. I mean, but that also means that SPUT isn't buying any uranium off the spot market, which is interesting because uranium is moving nonetheless. That's the really cool thing about it. Here's a chart of SPUT's held pounds in storage. So you can clearly see they were in action from July of 2021 up until the beginning of this year. But the huge rise up in uranium price in late 2021, early 2022, that was all SPUT. SPUT hasn't bought jack SPUT in the last several months. And yet the uranium price rises, and it's rising in the summer where it's not supposed to rise. And, we're exiting the summertime. And so it's it's a good sign. It's a good sign. The fact that we're overperforming in the summertime, that means that we're going to see the price rise even faster if we extrapolate out into the fall and in the winter. What do you guys think? All right, let's go to URA. I want to kind of highlight this this chart here that I usually do and why it's so important. This is institutional ownership for URA. URA is the most liquid vehicle in the uranium space. So the way these big hedge funds and family offices, how they position themselves in uranium, they either buy CCJ or they buy URA. Okay? So you've got the URA price here in black. This black line is the URA price. And then these green bars, this is what institutional ownership is buying. This is the volume of ownership that comes from institutions. This is your smart money. Now, I know you can't really see it here, but as this URA price consolidates, more and more institutional buyers gobble up this ETF. See that? So it kind of begs the question, if the institutional buyers were buying for a year and a half, then who's been selling? The smart money has been buying. Then who's been selling? Well, retail. It's not that hard. Retail always loses to smart money. And they just keep buying more and more and more. Let's go through some of these chats. That's all I got for charts at the moment. Let's go through what we got here. All right, so YC, hello. YC says, hello, please take a look at Forsyth Metals, the biggest weekly winner at the cheapest uranium stock with huge resources. I haven't looked at Forsyth, so this will be my first time looking at it. Let's open this bad boy up. Feel free to leave a super chat, guys, if you appreciate this work. Super chats get top priority when it comes to questions answered. And I'll usually go a little bit deeper on super chats. Let's see, FSY. Forsyth Metals Corp. Let's see what we got here. Let's go down to the, open this up on the daily candlestick level. Oh, cool. We've still got our linear regression line here, telling us that it's a little bit undervalued compared to the trend line here. But let's go ahead and hide this for a second. All right. Yep. Clear breakout of Forsyth Metals. Boom. Descending wedge. Boom. Breakout. What did the candlesticks say? Well, we had a bullish engulfing this past Friday, although it does look like kind of an inverted hammer candlestick, but it's still strong, guys. Looks good. Looks really good. See what else we got here. Gypsy Tree says, do you think energy will lead precious metals miners? Nothing seems bullish enough for a sustained multi-year run for the sector. When will smart money discover all historical low valuation? All right, well, let's look at uranium. And let's also look at gold side by side. See if there's any relationship here. Zoom all the way out as much as we can. So what do we got here? We've got gold and teal. Actually, let's open up gold in a separate panel. Okay. All right. And just go ahead and look at this regular, no percentage. So this is uranium here at the bottom, and you've got your gold price here at the top. And can't really make much out of it. Let's shift over to, let's do XLE. Let's look at energy as a whole compared to the gold price. I think we might find something there. Let's see what we got. Yep. So here, we've got XLE here at the bottom, and you can see XLE kind of tracks gold, I want to say. Right? You peak here in XLE, you see it peak here as well in gold. And then you come down. But in recent times, energy has been outperforming gold. So the idea is, as energy prices rise, it makes it a lot harder to get gold out of the ground, which thereby creates a shortage and increases the gold price. But I don't quite see it here on this chart, because you've got your energy pretty much tracking your gold price. Gypsy Tree wants to look at SILJ. Let's look at SILJ for a second. Any SILJ holders in the house? Any of you guys own some silver? Some SIL? Or PHYS? If you want to get off the JP Morgan. Is SIL owned by JP Morgan? Is that or is that SLV? All right, so SILJ. Let's see what we got here with SILJ. Yep. Looks fine. Let's look at it from a nearer term perspective. So yeah, SILJ looks like it's right on support. If you draw the support line from 2020 up until today, SILJ looks fairly cheap. Now this is the weekly candlestick. Boom. Is it time to move? Is it time to roll and rock with the shiny rocks? Guess we'll see. SOLJ looks good from a TA perspective, at the very least. All right. Chrismo 92E. All right, guys. This is the last individual stock I'll look at from a TA perspective. If you want me to look at individual stocks, it's going to have to be from a super chat. Otherwise, I can do sectors, but individual stocks, I'm going to have to limit those to super chats only. All right, 92E. Oh, damn. Look at that. Look at that. Descending wedge, clear breakout on the weeklies. And it's a small cap, right? $37 million market cap. So if this thing runs, it wouldn't take much to 10 bag it. Let's put it that way. So let's do a little comparison here. Let's see 92E compared to the URNJ. Is it outperforming URNJ? Junior miner versus junior miners. All right. So it actually has been underperforming URNJ, which might indicate that it's about to outperform it. Or possibly not. Yep. Descending wedge here. Broke out for a second, came back to retest, and we are right at resistance. Rick Fool. Rocket just took off. That's right, my ninja. You got it. It's exciting times. Will you do another collab with Uselink? Yeah, I'd love to. We've been having a little bit of difficulty getting our schedule set. Uselink lives all the way out in Denmark, so it's and I'm here in the States, so we've got to work around our time differences. But we'll definitely 2E, the cheapest energy stock. Yeah, I mean, as far as I can tell here, looks pretty good. Driver Hot says, compared to GDX miners, higher oil, higher XLE margins decrease. I think you wanted to look at GDX versus XLE. Is that what you wanted to do? Let's look at GDX versus XLE. Yeah, GDX, the gold miners are ridiculously cheap, guys. Even compared to the price of gold, ridiculously cheap. Let's go on the weeklies. Let's do a weekly look at this. Yeah. I mean, this chart goes all the way back to 06. Let's do a little log scale so we can get a better handle on our support line. Yeah, I mean, it looks like we're literally right at support. Right at support, and if we retrace back to this high, you're looking at a 4.5x from today, assuming energy stays constant from where it's at today. Okay? Let's do a regression line. Let's see. Oh, let's take it off log. log scale first. Let's do a little regression here. Say 820. Maybe a little more. 840, perhaps. Okay. Well, let's go balls out. 875. Okay. Okay, 900 should be fine. All right. So this pretty much traces a trend line going all the way back to 06. And overall, the trend is down. So GDX, the gold miners, have been trending down, priced in energy. Now, to return to fair value, you're looking at something along the lines of, if you just retrace back up to this trend line, it'd have to be a 30% move compared to the price of energy. Assuming energy holds constant, which it's, my opinion, is not. But yeah, I think GDX looks really good. The gold miners are really cheap. No one's talking about them. That's a good sign. I know we all love uranium, but I'm starting to see a little bit of a sentiment change, if you will, on X, formerly known as Twitter. Now, still don't have the same level of mania that we had in 2021. I know we had a few Wall Street Bets folks coming in, piling in at that time. We still don't have that level of exposure, but I can see a sentiment shift. I don't get nearly the same amount of negative comments about uranium like in my videos like I used to about let's say like a month ago or so. Okay, Nerd Kennel says, with the RSI at a high point in the URNM currently, in your opinion, do you expect a pullback sideways movement to reset before we move higher? All right, let's pull up URNM again one more time. Here's the thing, nerd kernels. It's actually a tongue twister there. Nerd kernels. When this thing moves, it doesn't give a you know what. I'm on YouTube. I guess I could say it, but in case you guys have kids around, I'll refrain. It doesn't care, let's say, about the RSI. Like, you look back here in 2021, I mean, this thing just rocketed. You know, one thing I like to look at is the Bollinger Bands. I'll show you what we had. Oh, it doesn't let me open up my Bollinger Bands because I have this open. Let's try it one more time. All right, it's a little too much action going on all at once. Bollinger Band. So it's 21 day or 21 interval look back. Anyways, this is measuring out 3 standard deviation moves. Right? So you've got the green line here, which is your moving average. And then you've got your blue lines here. Your first blue line is 1 standard deviation away. Your second is your second. Your third is your third standard deviation. Now, when we rocketed it all the way up here, I mean, we were looking at price changes that were like 3 standard deviations above the norm. And today, I mean, we're actually pretty high too. We actually could come back down, but we're 2 standard deviations above the average at the moment. So if you guys enjoyed this live stream here, be sure to give it a like, subscribe to the channel if you haven't. I appreciate all the chats. If you want me to do more of these, hit a 1 in the chat. If you prefer the pre-recorded analysis, hit a 2. What do you guys think? Should we just go live more often, or do you prefer the pre-recorded stuff better? Give me a 1 if you like live. Give me a 2 if you like pre-recorded. Both, okay. Yeah, we can diversify. We have a little bit of everything. It's a buffet here at Capital Cosm. Give you interviews. We give you market analysis. We go live. We take your questions. Got a lot of really good ideas about this channel, guys, that I still am keeping really close to the vest. Really appreciate you guys following me along the way. We'll keep growing. We'll keep producing content that helps you guys out every which way possible. You'll notice that we don't. I don't just stop at your boilerplate commodity personalities. I do get the Rick rules. I do get the Lobo T grades and so forth. But I also want to provide you some of that extra value that you might get from someone like Simon Michaud, for example, where we went really deep on just the lack of resources that we currently have the capacity to extract out, and what that means for us here as commodity investors. And Chris Kiefer too. If you haven't watched the Chris Kiefer interview, a really good, dense interview in terms of how nuclear, just the very fundamentals of nuclear power. So I try to give you a little bit of everything. It's not just boilerplate commodity analysis. All right, guys. I think that's it for today. Thanks again for watching. Really appreciate it. And I will see you in the next episode or possibly stream. Keep your eyes peeled. We've got a lot of exciting interviews heading your way next week. Some fan favorites that we'll be releasing this coming week. So keep your eyes peeled. In the meantime, I will see you later. Bye, y'all. Have a good weekend.